Ladies and gentlemen, welcome back. This is Christopher Aaron for iGold Advisor. It is July 22nd, 2021, and we are going to have a silver price update. It has been approximately 1 month since we have looked at the silver chart here in this series of videos. So let's have a proper update. And we're going to specifically look at the possibility that there may be a breakdown ahead, a significant breakdown. To be alerted when these videos come out, you must hit the red subscribe button right below this video, and you must also hit the bell icon. That will send you the notification. That way you don't miss any of these free videos. Guys, quick announcement. I'm going to be taking a bit of a sabbatical from producing these videos. How long I will be gone, I cannot say at this moment. I have a few other projects that I'm working on, and I'm going to be dedicating more attention to those. My best expectation is that I will return here for these free YouTube videos sometime late summer or into the fall. We will continue to produce our premium subscription videos. They come out every single week. So if you would like to hear from me during the absence here on YouTube, check out the website, and that's how you can hear from me every single week. So, what we're going to talk about here is not going to be pleasant. If you are one of those individuals who simply wants to be spoon-fed that gold is going higher and silver is going higher, this is not the channel for you. If you're one of those individuals who has an open mind and wants to truly learn how to navigate the markets, and you don't just see your investments in precious metals as, I have to get rich quick, it has to happen right now, boom. But if you truly want to learn about how all the markets operate, including the precious metals, then this is the channel for you. What is the fundamental backdrop for this possibility of a breakdown? It is, in fact, the most ironic thing possible. We are talking about record high inflation here in the United States, reported just last week. Look at this. The largest core CPI, which is a measure of inflation, largest core CPI move in almost 30 years. 30 years. Record high inflation, yet we're talking about the possibility of a silver breakdown. How does this make any sense? Aha, here's where I'm going to be different from most people who you hear discussing the silver market. It doesn't make sense. What you need to do as an investor is banish the idea from your mind for good that the markets have to make any sense in any sort of reasonable time period. As soon as you can embrace that, yes, the markets are manipulated, yes, the markets are irrational, yes, the markets are short-sighted, all of these things combined, it's not one or the other, and the markets are the sum of all these crisscrossing types of elements, including some genuinely correct individuals on the market. So it's a conglomeration of all these bits and pieces moving in different directions, the sum of which is certainly not logical or rational. As soon as you can embrace that as your backdrop, then you can move forward in actually studying the markets in a way that will help you for the entire course of your life. So, on what we were just talking about, it is not that the markets are entirely manipulated. If that was the case, we should not be involved in the silver market. If silver was going to be suppressed forever, I would say to someone who truly believes that, move on. Why are you hanging around in the silver market? Go to a market which is not suppressed forever. I participate in the silver market because I know it will not be suppressed forever. Yet, there are certain time periods in which it will be. And it appears, based on a study of the markets, and yes, we can indeed see where the manipulators, where the suppressors, where the actual buyers and sellers of the physical metal, where the producers that are supplying metal to the market, where the industrial users are coming in for solar panels, for the last remaining bits that still use it for photography, for electronics. We can see where all those groups come together at the same time. Yes, indeed, we can. Where do they come together? Right here. The current price. Everyone must come together at the current price. It is the law of the market. So let's see what we can see about this potential breakdown by a study of the current price. If this is too much for you, if you just need to be with a channel that's always going to tell you the price is going higher, even if in fact that is false, once again, you know where to find those people. You're not going to get that here. You're going to get someone here who actually wants to help you navigate the truth of these markets. So we've been talking about this pattern shown in blue here for the last couple of months, as shown by the first major low here back in December, the first major peak of this pattern here a couple months later, late January, the second major low of this pattern in March, the second major peak, really a series of mini peaks here into May and June, but we'll call this one functional peak all aligning here. This pattern of converging highs and converging lows forms a pennant triangle. It looks like the shape of a pennant flag that you would see, if, for example, in baseball, they call it you win the pennant. It means you're winning the league division, the American League versus the National League, because it takes the shape of this kind of pennant flag. So same thing here. This is a pennant triangle with roughly equal sloping lows and highs merging together toward what? An apex. Okay, you can see it. It's very clear to see right here. Now, there's one problem with this pennant triangle, and that is that the third attempt at a major low, which was just supposed to set up here 3 days ago, in fact, broke below the rising support structure for this pennant triangle. Now, this is a significant violation of the structure of what should be a bullish pattern, but instead it is starting to show us a bearish implication. If you want to ignore this, go ahead and ignore it, but I'm telling you, it's going to come back to haunt you if you ignore this kind of thing for the rest of your career. So, as things presently stand, this pattern is breaking downward. The line in the sand right now comes in at $25.45. So we're only 20 cents below that for a recovery of this lower boundary of the pattern. But as things stand now, and the more days and weeks that go on that silver fails to recover this lower rising boundary line here, shown in blue, the more real this breakdown becomes. And the rule in classical technical analysis, which we focus on what is called classical technical analysis here in this channel, it's a study of the price patterns that set up in the markets, as opposed to, let's say, for example, Elliott wave technical analysis. Nothing wrong with that. It's simply not the focus of this channel. It hasn't been the most useful for me in my career. I know I have some colleagues that prefer to use that. But in classical technical analysis, we place a foremost emphasis on support and resistance levels, trends, the primary patterns, in this case, pennant triangle. We also make use of Fibonacci retracement levels. We also use Japanese candlesticks, which is another discipline altogether, but I integrate Japanese candlestick analysis, just so you know. And we tend to look at volume at increasing important junctures. For this video, we will focus on classical technical analysis. This breakdown that we are seeing right now has a bearish implication for this pennant triangle the longer that it fails to recover the broken trend. Specifically, what would we be talking about for a target for this pattern? It may be calculated by measuring an amplitude of the widest portion of the pattern, which is $8.40, subtracted from the apex of the pattern here at $26.85, which gives us a target right down here of $18.45. And so the way that this pattern looks right now, this is the expectation for the pattern. Previously, when we were still in a neutral pattern, we had a bias of this of being upward. The previous trend was upward. This looked like a pennant triangle in formation. It should have held the lower boundary, which would have kept that bullish bias. It did not hold the lower boundary. And so right here at this moment, this pattern is having a negative bias until proven otherwise by a recapture of the broken trend. And there is a reason why you will have an $8.40 amplitude similar to here, target from the breakdown point, from the apex of the triangle rather, and that is because you will have roughly an $8.40 amplitude of buyers and sellers that came in here who will soon be underwater when this pattern starts to move lower, and they will choose to sell to cut their losses as each of these subsequent lows is in fact broken to the downside. So the numerical calculation here derives from a study of actual human behavior. Now, once again, is this a logical outcome based on the fact that we've had 30-year high inflation figures just reported? Absolutely not. Once again, the markets do not have to be rational. Right now, the markets are obsessed with this idea that high inflation is going to be resulting in future low inflation. I think the markets are wrong in the assessment that high inflation is going to result in future low inflation, but I'm also not dumb enough to sit in front of the markets when they are going to move in the opposite direction from me, let's say over a period of time. And by the way, the red arrows here are for your attention. This is not to imply that the silver market is going to decline this quickly down to the target. In fact, I think the decline, the $8.40 decline down to the target, could take many, many more months, way off the x-axis here of this chart. This could take well into 2022 or 2023 to achieve this target. And so the strategy, this is where I'm not going to reveal everything that we supply to our premium subscribers because it would be unfair to our paid subscribers to reveal everything for free. But the strategy of how to navigate a potential decline like this is going to be highly dependent on what sort of investor you are. If you are a long-term stacker of the metal, you may welcome an $8 dip here. You may get a chance to buy back in the upper teens, for example, within the next year or two. If you are highly invested, however, in leveraged forms of silver, including ETFs, options, or the silver miners, this is something that you cannot ignore right now. I have seen in my career, in an $8.40 decline in silver, I have seen certain silver miners, in fact, go to zero. And I suspect that some will, in fact, go to zero again. That is one of the prices to pay. If you're going to look for leverage, there's always leverage on the downside. Now, the sum of the silver mining complex will survive, and there will be incredible bargains when this thing is over. Look, let's take it one step at a time. It's too far ahead of time to be thinking about all those things. What I'm saying right now is that we are seeing initial evidence of a breakdown in the silver market. To negate this, silver must give us at least a weekly close above $25.45. If that fails to materialize here over the next 1 or 2 weeks, it very strongly increases the probability that we will be heading down to 1845 within the next 12 to 18 months. You should consider protecting yourself. Sometimes in the markets and in life in general, we need to lose the small battles in order to win the larger war. Remember this. You want to survive the small battles so that you are able to participate in the bigger war when it happens. If you would like to learn about the specific strategies that we are implementing here to not only protect ourselves from this potential decline to come, as irrational as it may be, it is going to result in real losses for investors here if that pattern stays below the rising trend. If you would like to learn about the exact defensive measures, and not only that, but the ways that we can profit as silver declines, because there are ways to profit, please consider checking out our premium research service, Precious Metals Intelligence. We tell you the exact strategies that we are implementing here to navigate what may be this decline in silver. These updates go right out to your inbox at the exact moment that we are making these decisions here. When this sector bottoms, you will also get the exact gold and silver miners that we are investing in here, as well as video updates covering not only silver, but gold, the US dollar, the US stock market, and the rest of the commodity complex. All this is included going right to your inbox 50 weeks per year. I think this is an essential time to consider properly navigating this and not just relying on hope to salvage your future as an investor in the market. Once again, do not think of this silver market as your one opportunity in life. That is short-sighted, and that really belittles your potential as a human being. If you're latching onto this theme and saying, I have to be right on silver, within the next 5 years, or else I'll never have any other trick up my sleeve, I'll never have any other strategy to succeed in the markets, you are not giving yourself nearly enough credit. Not nearly enough. There are infinite opportunities in the markets. So if you want to join us on this journey of navigating what could be a significant road bump here, consider joining now. If you would like to speak to me one-on-one about your unique situation, if you're overly invested at this point and what I just said here brings a little bit of fear or trepidation into your step, which it should, consider scheduling a consultation so we can speak one-on-one. There's nothing too big and nothing too small that we can't work with here. This probability of silver falling here over the next 12 to 18 months is not what we originally expected when we were studying this pattern here over the last year. It has just manifested now by breaking the lower boundary of that rising triangle, and we have to side with the visible evidence in front of us. As irrational, as illogical, as full of manipulation and suppression as this might be, we still have to pay attention to it. To do otherwise would be like sitting in front of a train track and saying, oh, well, the train is not due to come for another half an hour. It's illogical and irrational, and perhaps there's some manipulation of the schedule. The fact that I'm seeing a train come right at me right now, it's not due for another half an hour. You want to have that argument? Go ahead and do it. I'm going to jump out of the way of the tracks. So like I said, guys, I will be taking a sabbatical from these videos. Take care of yourself, and I will see you on the other side.